Good day, my name is Adrian Meager and I'm the Chief Investment Officer of Orion Investment Managers. And today we'll be discussing our Q1 2025 asset allocation positioning for our multi-asset funds. As per usual, first up we're going to look at the South African asset classes and we'll start with cash. We are underweight cash due to the expectation that the SARB continues to cut interest rates over the next 12 months. Our base case is for 2 cuts of 0.25%, probably in the first half of 2025. However, even though we are underweight cash, we do use cash to fund new opportunities as we see them. Bonds, we are negative on inflation linkers, and as such, we have no exposure in our multi-asset funds. We remain neutral on nominal bonds. These are South African bonds. However, we have shortened our duration to neutral relative to the All Bond Index. Yields do look attractive, but have compressed quite a bit, now to about 9.3% for a generic 10-year bond. Local property, we remain constructive on property, even after the property index's strong rally in 2024. We did take some profits last quarter, and our new target weight is 7% for our balanced funds. Property fundamentals remain attractive as we move through the rate cutting cycle. Lastly, local equity. We remain positive on local equity and have therefore maintained our exposure. Our local equity remains overweight industrials. We are underweight financials and resources when you look at them relative to the JSE Capswix All Share Index. Moving now to our international asset allocation. First, let's look at international cash. We remain underweight international cash, even though we expect developed market interest rates to not be cut as aggressively as originally anticipated. We therefore prefer global equities over bonds over cash. So let's look at international bonds. We are neutral global bonds with the expectation that there will only be 2 rate cuts during 2025, and this is from the Fed in the US. And we think these will probably only happen in the second half of the year. Considering this, we actually reduced our exposure to be shorter duration. And how we did that is we sold some of our longer duration bonds, those sitting in the 15 to 20 year bucket. And now when we look at our duration relative to our international benchmark, which is the Bloomberg Global Aggregate Index, we are short duration. International equity, we remain neutral on international equity. However, we did upweight our exposure to about 30% in our balanced funds and about 17% in our low equity stable funds. We still prefer exposure to developed markets over emerging markets. And on a relative basis, we are overweight US to Europe and the UK. We believe that asset allocation has a major impact on fund performance. So we view and set our strategic asset allocation on a quarterly basis and amend our model portfolios and funds in line with the house view after each quarter. We will remain true to our investment philosophy and will continue to manage our clients' investments accordingly. Thank you, and until next time, goodbye.